Net U.S. stocks also closed lower in the regular session. The Dow dropping more than 100 points, weighed down by a handful of sluggish earnings reports. Robust economic data and comments from the ECB also fueling concerns that the Fed may not be as dovish as expected in next week's meeting.
Let's bring in Paul Dietrich, CEO and also Chief Investment Officer, CIO, Fairfax Global Markets, joining us live out of Washington, D.C. Paul, always good to talk to you. Thanks for staying back to do this with us. So it seems as though the big risk the markets are contending with right now is that they may not be getting as much help as they had originally thought or would have liked from either the ECB or maybe even the Fed. You're only looking for one cut from the Fed this year. That's likely to be at the end of this month.
Well, I think you have to take in a little bit of politics, which we do here in Washington, D.C., in thinking through this. Next week, when the Fed decides, I think they are going to cut rates by a quarter point, unless there's a lot more slowing. The economy is slowing in the United States, but it's not dramatic. And I don't think that we're going to cut any more for this year. But next year, I see at least a couple of cuts, probably of a quarter point. Let me just tell you why. I mean, President Trump wants to run for president. He's gonna pull out every tool in the toolbox. He's going to use every lever of power that he can to keep this economy going, because it's the one thing that, will get him reelected, if anything. Yeah. And so this is the key thing. And he's now sort of put two people on the Fed. He now has a majority of people who agree with him on the Federal Reserve of cutting rates. He's going to do everything he can to goose the economy through the election, and that's why I think they're saving the cuts for next year.
Okay, so I like that not so technical term they use, goose the economy as well as goose the markets. Here's the thing, though, one cut only this year. You're looking for two next year.
That's an economic term.
Yeah, I'm sure, right? Yeah, I've heard it before. The thing is, when is the market going to start pricing that in? Likely going to keep the market going, but when?
I think we've been hitting record highs in the last few weeks, and I think people have sort of priced it in that the economy is going to be very good next year, whether it really is fundamentally or not. But because of the manipulation of the economy through Fed policy, everybody I know here in Washington, every economist believes that that's going to happen. And so we're all looking for a very good year in 2020. If there's a recession, and there will be a recession at some time, it's probably going to be right after the election in early 2021.
Okay, Paul, let's focus in on the earnings reports for a moment and what's going on with earnings season. We've obviously had a raft of numbers coming out after the bell. Some of the big names in the tech space. I know you're currently holding Intel. I'm not sure about the other stocks, so you're probably pretty happy with the way Intel's performed so far. But talk to us about the earnings season in general before we look at the specifics. What's your general feeling? Because the majority of companies that have reported have now beat expectations.
I think it's 76% as of last Friday had beaten expectations, and we were expecting a negative quarter with earnings, and it looks like right now that we are going to have a positive quarter. And again, you got to remember, it's year over year, and last year everything got skewed because of the tax cuts. And so if we have a positive quarter this quarter, which it looks like we will, I think we'll do really well. Most of the projections are that it's the next quarter and the fourth quarter that are going to really be good quarters for earnings.
What's your feeling on Amazon after the numbers have come out tonight, Paul? Is Amazon a stock you like?
Yeah, I mean, Amazon is a great company. It's dominant in what it does, and they make a lot of money off of the cloud. And we've seen this before, where they have a quarter or two of down earnings, and then they come right back up again. And you just have to look at that history. I'm looking at all the regulatory stuff, and a lot of these stocks have gone down over the last few days because of the Department of Justice and the Federal Trade Commission are going after Amazon, Facebook, Apple, and Google. And they're going after them for antitrust problems. And the good news for investors, you ought to be buying these stocks now, because in the next few days, people are going to be realizing they're going to be reading the Wall Street Journal and all the other newspapers. They're going to find out that the history of antitrust, it takes years for them just to do the investigations. Then it takes years for them to figure out what kind of regulations. I'll be surprised if they're not still doing this in 7 years. And in the meantime, they're still going to be carrying on with what they're doing right now and making lots of money.
Oh, yes, indeed. And talking about making more money, Apple is investing a lot more in its wireless chip unit by buying Intel's business for $1 billion. And that, kind of rests the case in terms of getting the microchips supplies that they were kind of grappling with earlier on in that deal that they struck with Qualcomm. Is that a shot in the arm as we await earnings from Apple? And what would that mean for the stock, which has had a stupendous performance this year?
Yeah, I mean, if you look at the companies that are going to be the major beneficiaries of 5G, the head of our National Science Foundation in the U.S. said this is the greatest technological advance since the Gutenberg printing press. It's bigger than the internet. It's bigger than iPhones. It's going to change everything: smart cities, the military, medicine, you name it. And some of the biggest beneficiaries are going to be the telephone companies like AT&T and Verizon, but also Apple and Intel. And Apple and Intel and AT&T, these are undervalued stocks. Their stocks right now are selling for under the forward PE for right now of the average. And you can buy them at a discount, and yet in the next few years, the amounts of money that I project that Intel, Intel, Apple, and AT&T will be making will be amazing. I mean, nobody's going to buy a $1,000 4G phone this year. But next year, when the 5G phone comes out and everything will be different, think about it. Every iPhone that they've sold for the last 10 years will have to be upgraded. That's going to be the greatest revenue boost that any company in the S&P 500 has ever seen.
Fair enough, Paul. So you're saying Apple is undervalued at close to $1 trillion in market cap. And so then where would you place the fair value for the stock?
Well, it's right now, as of yesterday, selling at a 16.5 forward PE. And you can't look at backward PEs because they don't include some of the tax cut period last year, so you get it all skewered. So you want to look at forward PE. The average PE in the S&P 500 is 17. Apple's selling for 16.5, and I think Intel's selling for 11. I mean, you've got to be nuts not to think that that's not going to last all that long.
Fair enough. Paul, stay on with us. We need to discuss a lot more with you as we go along on the show. Still to come.